Greetings everyone. I hope that you guys are good. So today we're going to be looking at the Twitter chart, right? We're going to be looking at the technical analysis for Twitter. So let's get straight into it. So I've got the monthly chart open for Twitter, and the first thing that I can already see is that we have a large information. We have a large information here, with the neckline being around here, and the structure is not yet complete. So that's the first leg, right? Price came down to the neckline, went up again to create the second leg of the M structure, then came down, breaking the neckline, then coming back to retest the neckline, and the expectation from here is that price should come to at least this level over here, right? So I'm just going to plot some lines just to show you exactly what it is that I am referring to, right? So that's the first leg of the information. Right, and then we've got the formation of the second leg, which is this, right? And then we saw, oh sorry, we have the neckline. Let me just add the neckline quickly. And we have the neckline somewhere in this region, right? So what we saw was price breaking that neckline, confirming the actual information. Once price breaks this line over here, or this area, what we expect is for price to head back to that area to retest it, and then head down to at least this level. That's the anticipation at this point, right? So that's what price did, came here, and then we'd love to see it coming down here to this level, around this level. That would be our take profit, right? So we were supposed to actually be looking for selling opportunities at this point. It may be a bit too late to sell now, because the one thing that's very important when it comes to trading is to not chase any trades, right? We were supposed to look for a selling opportunity here, and if you got one, good for you, right? So let's continue. I'm just going to head on to the weekly chart, right? This is the weekly chart. The first thing that I can see on this particular chart is that we have a gap over here. So what this immediately tells us is that at some point price has to come to this level to fill that gap, because there is a lot of liquidity trapped in this area, right? Yeah. What else can I tell by looking at the structure? I can see that there was also a smaller information here with the first leg, second leg, sorry, the first leg, price came down, forming the second leg, and the neckline was around here. But at this stage we can just ignore it, because price actually turned here, right? Should price close above this area and head to this level, then we can take this particular M into consideration, but for now let's just ignore it. So what else can I see based on this weekly chart? I can see that we have, at this point, we have excuse me, at this level we have a bearish candle with a small body and a long lower wick. So what this tells us is that at this level, or where that wick ends, there's a lot of liquidity stuck there, and price at some point needs to head down there and grab some of that liquidity before actually going up. And if you actually look, it's actually in line with the structure that I just spoke about earlier, where we have the M formation, price breaking the neckline, coming back to retest the neckline, and then continuing to this level. So that would be the liquidity grab that I'm talking about. Let's continue. Another thing that I can see, which is also very important, is that we have a formation of a small W here. It's a W formation here. So we've got the first leg, price went up to the neckline, then we had the formation of the second leg, price went up and it broke that neckline. Let me just make it bigger. Excuse me. Choose a different color. Let me go with a green. So this would be the neckline, and then we had the first leg, let me just make this a different color so we don't get confused. So that's the first leg. Second leg. Just bear with me, guys. There we go. Right? That's a W formation with a neckline. The neckline was broken, but price never came back to retest the neckline before actually heading up again. So what we can see just by looking at this is that since price bounced here at the neckline of that large M structure that we spoke about, if you sold here, your first take profit should be around this area here, in my opinion. Why do I say so? It's because we've got the formation of this W structure, and as I said, whenever we have a W or an M structure, once price breaks above or below that neckline, the anticipation is that price should come back to the neckline and then head up again. That's anticipation, right? That's why I say that your first take profit should be at this point. Let's move right along. So I'm just going to use Fibonacci to see if actually this level aligns with any of the key areas on the Fibonacci retracement tool. We can see that actually the neckline is in the area of the 61.8% Fibonacci retracement area. So this is a very good area, it's a very strong area, and we might see a retracement at this level. We might see one. But as you know, a lot of factors determine where prices go exactly. Especially because we have what we call fundamentals at play as well as news releases. So I'm just going to delete this Fibonacci. That was just for illustration purposes. Let's head on to the daily chart. Okay. Excuse me. So we have the daily chart now. I'm just going to remove some of these drawings so that our chart is not so messy. But I'm just going to leave the neckline so that we know at the back of our minds that we have a W formation at this area, right? The first thing that I can see on the daily chart is that we have a huge gap here. And as I said, when it comes to gaps, we know that they need to be filled. So price needs to, at some point, come back to this level over here, because there's a lot of liquidity stuck at that level, right? And we might actually see price coming back to this level and then heading back up, or it may come to this level and continue going down, right? The most important thing when it comes to trading is that we should not be predicting, we should be reacting. Remember, be reactive, not predictive, and don't be married to a single direction. Always react. Okay, let's continue. Another thing that I'm gonna add now is our channel on the daily chart. Let's see. Okay. Just gonna add a channel in this manner. It's a very steep one. I don't like steep channels because generally they are easily broken. But just for the sake of illustrations, I will just add one. It's a very steep one though. Yeah, it's probably going to be broken very easily, but let's just go with it for now. There we go. I'll put my channel like that, right? And remember, your channels always have to be accurate to increase your chances of being profitable in this business. There is a relationship between your results and the accuracy of your analysis. So this is very important, right? So this is the daily chart. What else can we see just looking at this chart? I can see here that price stopped at this level, right, after testing the neckline of that large M pattern that we spoke about earlier. And what we may actually see is price may head back to this level before actually coming down. Why do I say so? It's because we have a candle here which is a bullish candle with a small body and a very long upper wick. So what this tells us is that at this level over here, I'll show you now, at this level we have what we call candle filling that needs to take place. As I said earlier, candle filling is an area where there's a lot of liquidity, and price at some point has to come to this level to fill that candle, right? So what we may actually see is another information. So this may be the first leg, price coming down to the neckline, right? Then going up to fill this candle, and then continuing, or rather creating the second leg of the information, closing below this neckline, and then coming to this area, or even passing this area and heading to that area that we spoke about earlier on the weekly and monthly charts, where we have candle filling as well that needs to take place. All right, and then from here what I would do is I would head on to the H4 chart to see what exactly is going on at that level. So what we're doing, guys, is we are gathering evidence for why we would be looking for buying or selling opportunities. This is the best way, in my humble opinion, to go about trading, because you get a bigger perspective in terms of what's going on in the market, because we start analyzing from the monthly, then to the weekly, then to the daily, and then to the 4-hour charts, right? Let me just fix my monthly channel. not my monthly channel, but my daily channel rather. Just bear with me, guys. Okay, there we go. So I'm just going to delete this line for now because it actually applies to the weekly and the monthly chart. Okay, so this is the H4 chart. What's the first thing that I can see just looking at this chart? I can see that here price actually formed another M formation. The first leg of the M, it's actually an overextended M formation. We have the first leg of the M here. Price came down, creating a neckline. It went back up and then it broke the neckline. And then here price came back to test the neckline, but it didn't quite reach the neckline. Let me just do this just to illustrate. I'll just make it a different color so we don't get confused. Okay, the neckline would be here. Information, the breaking of the neckline. Price attempted to go back to the neckline, but it didn't quite get there. It ran out of steam and it seems it started to go down. But like I said, guys, remember we have candle filling here at this level, and what might actually happen is price may still come back, come to this area, touch it, and then come back down, or it may come back to this level and then come back down, right? Another thing that I can see is that we have another W formation here. We have another W formation here, right? So we've got the first leg here, price went up, creating the neckline of the W formation, came down, then went back again, and then it rejected this, then it came down again, right? So for now I'm just going to ignore it because price actually came down. It didn't close above it, above this area. The candle might have closed above it, but remember I said that this is not a line, it's more of an area, and we need a proper close above, and then price needs to come back to the neckline, and then we may look for buying opportunities, you know. But in this case I'm just going to delete this because I don't think it's relevant at this time, due to the fact that price turned at the neckline and it didn't really close sufficiently above it, right? And then I'm just going to add an equidistant channel on the H4 as well. Okay, yeah, so yeah, that's where we are in terms of Twitter. At this point I wouldn't really be looking for any buys or sells. I would actually wait for price to come back to this level, and if it gives me any selling opportunities here, I would sell. Number two, if it breaks above this area and heads to this area, I would wait for price to actually fill this candle and then look for buying opportunities once it has given me an M formation, a break of the neckline of the M, a retest of that neckline. That's where I would look for an entry going down, you know. And just to go back, my first take profit would be around this area here, where we have the formation of a W formation here that we spoke about earlier, right? If price closes below this area and also breaks this channel, I would look for more selling opportunities, because ultimately I would love to see price head to this level over here, and that would be the completion of this huge M structure, where we have the first leg, price coming to the neckline, then creating the second leg, breaking the neckline, and then coming back to retest the neckline, and then doing this. And then doing this. And then our M structure would be complete and perfect, right? So thank you guys for watching. If you have any questions, just let me know in the comments section. If you'd like me to look at any other chart, just let me know in the comment section. Thank you for watching, and peace out.